welcome to Al Stock Trades. So this is going to be a very special video. We're going to go ahead and go over another video we created that is in our Al Stock Trades website here. And if you scroll down, there's a little video here you can play, and it's a 10-minute video. We're going to go over it, but there is some confusion that I want to point out because I hate when companies do they essentially increase the amount of shares to where it essentially causes the stock price. So it's a stock split, right? And they increase the amount of shares to essentially make it look like the stock price is cheaper. And in this video that I'm going to show you, this is our sample price target, which basically shows you the power of the intrinsic value calculation. It's going to show you a timeline where we were making the video as NVIDIA was going down. And we called out NVIDIA way before, but we called it out again here as it was falling down. And it was around $174, $150 when we called it out. Now, you might ask yourself and say, well, Al, it's $135 now. It's never been $150 before. It's never been $175 before. Well, that's because there was a stock split. Now, maybe you guys know this, but 5 years from now, 10 years from now, when someone's going to come on this website and they're going to be like, what is he talking about? $150 back in the day? It never, this guy's a scammer. This guy's a fraudulent scammer. It was never $150. And unfortunately, these are the types of clients that, need help the most, right? These are the types of people that really need to understand how the stock market works. And unfortunately, these people are the ones that lose the most money and gamble and all that. So, another thing is those are also the clients that we don't want in our platform, because you got to have some level of you have to have some level of an IQ to do well in our platform, if that makes sense. Our platform is not made for children, right? So we're going to go ahead and we're going to look at this video and we'll take it from there. Okay, let's go ahead and do that. So I'm going to go ahead and stop the share, and I'm going to share the audio version if I can find it here. And then we'll go from here, and then we'll just kind of go back and forth. You know what I mean? So it's going to be kind of annoying, but we're going to manage here. So let's start it out.
Welcome to your Mastering Stock Market course. In this video, we're going to be giving you an example on how to approach companies with positive free cash flow and positive net income calculations. But first, we have to preface the story. Imagine you're sitting here in this chair. It's January 4th, 2019. We've traveled back in time. We don't know what happens in 2019, 2020, and the rest of 2021 and 2022. We don't know.
And just to recall, this video was made in 2022. As the stock was falling and everyone was telling people to sell. We were making this video. So we wanted to kind of hide the financials of 2021 to 2022 and I believe 2020 to show if we were able to predict NVIDIA's climb all the way back from like 2018 or something. Okay, so this will be a great educational video. So we'll go from there.
Know anything. All we have are the numbers that the company gave us in the fiscal year of 2018. You check the stock price and you see that it's trading at $34.05, losing half its value.
So you might ask yourself, you're like, Al, $34? But yeah, I mean, that makes sense because it's $135 now. Don't be stupid, okay? Don't be stupid, all right? Sorry to call you stupid, but don't be a fool. Look up January 4, 2019, and you go here, and you look at January 4, 2019. So we'll look at, where is it? January 4. Right around here. NVIDIA was $3.72. That's because of the stock split, right? We said it was $37 on the video, But because they did a stock split, it's now $3.72. And if you just move the decimal by 1, you'll realize, oh, it's the same thing. 37. It's just math, which unfortunately our school system does not teach people well. And unfortunately, people always like to say, I'm not good at math. It's almost like basically saying, I want to be poor for the rest of my life. That's pretty much the same. It's pretty much the same thing, right? All right, so let's go ahead and let's go back to the video. Stop the share of the screen. And then go here and do the audio again. And let's watch it.
Everyone's telling you to sell. The specific stock is NVIDIA Semiconductor Chip Play NVDA. You're trying to see what's going on in the market. So you look at the smart money and dumb money confidence spread. You see that retail investors, which is dumb money, have been selling and we're at all-time lows at January 4th, 2019. Institutional investors are buying. So you decide to go against the grain as what's taught by Benjamin Graham. Be fearful when others are greedy and be greedy when others are fearful. So you begin doing your analysis of a company that's free cash flow positive and net income positive.
Okay, so as you can see, just like I did for Enphase, I went ahead and cut off 2019, 2020, 2021, and 2022. Again, the video I'm showing you, I created in 2022 when the stock price was around $155. But because the stock split that recently happened, it would be around $15 to $12, $11. You just have to move the decimal. Okay. And what we're doing here is we're trying to basically look at if this company is going to be successful. Well, revenues are increasing, gross margins are increasing, net income is going up. I mean, look at the stepwise fashion of net income. It's not all over the place where it's like a freaking child scribbling and incoherently where net income is up and down, up and down. This is a consistent rise in net income. A consistent rise of earnings per share, which makes sense because it's a derivative of net income. A consistent rise of dividends. There is a somewhat stabilization of shares, which is good. You don't want a lot of shares, right? Book value per share, a consistent rise. Okay. A free cash flow increasing in the billions. Again, these numbers are in millions. Back in the day, Morningstar had this data available. Unfortunately, they stopped it, which is why we built Brain Machine and our software to be able to basically democratize financial information by providing this important information, because by seeing these sheets, you'll be able to quickly assess if a company is good or crap. Let's continue.
To do this, you would just literally plop the numbers down here. So I recommend taking a screenshot and watching how I do this. So you go in to your discount cash flow calculator. You go on in 2013 and you realize they've made 563.
So again, this was created in 2022. So now that intrinsic value calculation is a lot more sophisticated than this, there's a lot of things that we added on to it, like a workspace and whatnot. But this is pretty much the same deal. Okay.
Million, and you go to 2018, and they've made for that fiscal year 3047. And I'm doing this in real time to show you how long this should averagely, take. So that's around $3 billion. Okay. They're growing 40%. So then now you go in, it doesn't matter what year you place it in, you go in and put the free cash flow because it just takes the average. So you put in the free cash flow for those years. You want to make sure you check your numbers. You don't input the wrong number because that'll be definitely a problem. Then you would just put that last number in there. And then you would just take the numbers of outstanding shares, which at that point is this number here going to 2018, 2528. So you would get a calculation of bear case $45, base case 63, and a bull of 94. So that's great. You're going to be doubling your money pretty much. But then this is what separates an intelligent investor, someone who goes in and just plugs and chugs, from an actual master.
So this is exactly where people that go to the next level. So anyone can just copy pieces of numbers and put them on. But what separates a master from just a copy and paster is the ability to actually graph this out and see, has there been an incremental change within the investment thesis or an acceleration of revenue, free cash flow, to where you might be able to use those numbers and potentially create a intrinsic value price target that maybe other people do not see, and the market is essentially not valuing correctly. And with NVIDIA, you can see that the market got it wrong for many years. And finally, now the market is loving NVIDIA. And maybe NVIDIA, I haven't checked its intrinsic value recently, but maybe NVIDIA now is in a position where potentially maybe it might be too overvalued. Mr. Market went too crazy on it, right? So let's continue and watch this here.
A master would say, you know what, I'm going to take a look at the revenues and I'm going to look at the gross margins. The gross margins have been increasing. The operating margins have been growing, which basically means they're able to keep more of the dollars that they basically get in, this, whatever they get in from in the door, which is the revenue, they're able to keep. And we're going to go over all these definitions and what they mean. This lesson will teach you how to use the calculator, but also give you some gems on how to evaluate. So what separates someone who does fundamental analysis than from a master? A master would go in and graph all the revenues, the net income, and the free cash flow, and almost go down to a basic calculus route and say, you know what, this kind of looks like some form of a parabola. But instead of looking at this, you would take little subsections. You would take your binoculars and you would say, you know what, the growth rate, if we start here at net income from 2013 to 2015, it doesn't look like it's grown a lot. It seems that it's been stagnant, but something happened. You can see this humongous increase here.
And that's exactly what I'm trying to point out. You see, what we did is we took the average free cash flow from 2013 to 2018, but that's not correct, because what you're putting emphasis on 2013 and 14 and 15, saying that maybe those are going to repeat in the future, which is conservative. But if you want to take more of an aggressive approach to say what could be the potential of NVIDIA, then you could just focus on the latter subsections here, guys. And that's what the video is going to be explaining, right? And that's going to say, you know what, if they continue on this growth rate, how far up can it go? What could be the sky limit? What could be the limit? Let's continue.
Something happened within the fundamentals to where now they're able to make more money. You see it here in the free cash flow, 2016 and on, and also here in the revenue. So intrinsically, something has changed in the business, and a lot of people are evaluating the business as a whole, and they didn't realize that this business is about to take off. Something happened within the numbers. So what do? Well, here you have 4 low numbers.
And just letting you know, this video was created in 2022 before it took off even more. So it just shows you how Wall Street can be wrong at things. And it's just so sad that, retail investors don't know this. And in fact, when I was talking to them about AMC, how, there's a lot of debt, they said the fundamentals don't matter. The numbers don't matter. I mean, it's almost basically like saying, a patient comes in with a sodium level of 120 and they're hyponatremic and they're like gonna get, no, it's okay. The numbers don't matter. It's like a doctor saying, you know what, man? You know what? The numbers don't matter. If the glucose levels are 1,000 and the urea is 50 or 100, the numbers don't mean anything. This is a different play here. We're in a different game here. I mean, you can see it's very delusional. It's extremely delusional, right? All right, let's continue.
And 2 high numbers. So if you want to take an accurate description and you would say speculation based off of these price targets, based off of these prices, we're going to neglect 2013 and 2014, and we're going to focus on 2015 to 2018. That is a steeper slope of average than, let's say, this average here. If we were to draw a line, if we take the average of 2015 to 2018, it's going to be growing higher than the...
And we're still trying to be conservative. We added 2015. That's still a low number, right? We're being a little conservative here because, we want a little bit on the downside. So we don't want to be too aggressive, right? But I guess in NVIDIA's case, maybe it was beneficial to be aggressive, right? So let's see.
40% that we saw from 2013 to 2018. By doing this, we already know from a conservative perspective that this stock price is undervalued. Now, all we have to do is to see what is the highest level can we see with this stock. And then you could go in and you would go in and buy, and then you would wait to see 2019's number, 2020's number. And you would see, is this trend tracking along as time goes by, as it ascends to its intrinsic value of what we calculate anywhere between 63 to 94. So that's how the idea would be. So to do that, very simply put, you would want to go in and just change the 2015 numbers because the 2018 stays the same. But before we do...
So what I want to do is I just want to basically stop to share real quick, and I just want to share the normal screens here because I want to share with you something. So how I told you in 2018, So where do we stop this at? We stopped this at 521. So let's go back to here. Okay, you remember how I told you if you look at the share count in 2018, the share count was 2,528, which is equivalent to 2.5 billion shares. Well, if you go to the share count now, back in 2018 here, this is the current most up-to-date share count. And if you go down to the share count here, it now says 23,960. Okay. What the hell happened? Right? What in God's tarnation happened to the share count of 2,528? Well, they went ahead and they did a stock split, which means that now if you owned, let's say, one share and they did a 10-to-1 or whatever, you would own 10 shares, but it just divides out. And if that doesn't make sense, then you guys really need to do your homework, because you shouldn't even be in the market, right? You guys need to be able to, you guys really need to do your due diligence, right? So what that did is it lowered the price of the stock, but still kept the same market cap, right? So back in 2018, and you're going to see a price of NVIDIA, this was in the $100 region. Then it basically 10x. It went from $100 to $1,000, which is around a 10x, right? 8x. This makes sense because, well, they went ahead and essentially did a stock split, right? And unfortunately, some people are just going to know that and some people don't. Sometimes people just don't have the math savviness to do division and subtraction and addition. And I get that, and I guess that's what gives us, people like us who know this information and who have the resources, the equations, and the data to essentially make money over these people, because these people are donating their money to people like us that will probably be able to spend it better, right? And I know that sounds harsh, but that is basically the game of Wall Street, which is what I'm trying to teach to all the middle class people, so they get protected to not, so we can, you can move forward, right? So let's go ahead and go back and let's stop the share, and let's share the audio version. And let's go ahead and go with it.
Just literally plop the numbers down in the business. $2015 numbers, because the 2018 stays the same. But before we do that, we want to take a look at the stock price trading right now. And it's at $34.05. So let's just say we are not masters. We just want to be normal investors. We're like, you know what, that's a nice cheap price. $34. What, that $45 is the bear case. So if we take $45 times 20% margin of safety, that's $9 difference. You would subtract $9, you would get $36 as a really good entry price. And what we're doing is we're trading at $34. Hence the reason why smart money is buying. So you then go in, and as a master would do, eliminate the trends that were negative and focus on this abnormal growth rate. Zoom in and to see, well, how far can this company take it? And all you got to do is just change 2015 and 631. So all you got to do is go to your calculator here. You type in 2015 and 6, make sure I get the numbers right, 3, 1. Now you're seeing they're growing at 69%. And the stock price now is hovering anywhere between 253 to 564. Now, mind you, I kept the free cash flows from those years to just be a little bit more conservative to compress the stock price. Okay. So we're looking at a bear of 253, a base of 366.
So when the stock price was trading at $4, you would have predicted that this thing was going to go to $564, right? And we kept the older free cash flows. Imagine if we were to keep the newer free cash flows, we would have essentially gotten to the price target of NVIDIA when it was around $1,000, $1,100, right? But again, the newer people in the future, in 5 years from now or whatever, they're going to forget about the stock split, right? They're going to always look at NVIDIA as around $100, $150 stock, right? Whatever, depending on what it is, right? And who knows, maybe it might be $200, $300, right? And they're like, wait, what? NVIDIA was $1,000 back in the day? Oh, glad I didn't buy it, right? Because unfortunately, they're misinformed. And people that are people that are misinformed, when their people are educated after it, okay, that's fine. If you're educated and you become informed, then you're just ignorant, which is fine. Ignorance is bliss, okay? But if you get educated on it and then you still argue, then you're stupid. This is a definition of a low IQ, right? In my book, right? And again, right, this is this is me outside of the clinical setting, and this is kind of how Wall Street works. This is how life works. You give the information and knowledge, and if people argue, say, hey, 1 + 1 does not equal 2. Okay, I don't know what to tell you, my friend. Best of luck with you, right? So this, you are able to predict a high percentage of increase just from a few pieces of numbers. Okay. So let's go ahead and continue.
In a bowl of $564. So let's say you went in, you're like, you know what? I like these numbers. I'm going to go in and buy. And would you look at that? You bought right here. And you waited many years. And you finally shot back up here.
I wouldn't say that's many years. That's just 1 year.
Before the pandemic even happened. And you made your money. You essentially got to a point where you've hit your intrinsic value calculation here. You doubled your money, but then you realize the company has gotten stronger. The financials of the company have gotten way stronger. The net incomes have been increasing. And 2020 was a flop, but then 2021, they became stronger and your calculation became true. Our base case was $366. Look at the 52-week high here, right there, $346.47. You see, this is the power of fundamental investing. So it's not as easy as just taking the numbers, plugging them and chugging them into your calculator. You got to understand that you would have to go into these numbers and see year by year, be aware it's just skyrocketed. Whole value.
The point here, hey, how you doing, Patrick? Hello. So the point that I'm trying to make here,
right here,
if you don't recall, let's go ahead and let's remove the audio here and let's just do normal share of screen because it won't let me click on the other one. Hey, I love you. I love you too. I love you too, brother. So check this out. So back in what is it? May 16, 2022, the stock was trading at $177, right? Someone who unfortunately even just doesn't understand, is ignorant, would say, Al, that's impossible. The stock was look at Google. I can't make up Google. It's $177, right? Like, no, Al, I think there's something wrong with Google. It was never, the max is $133. It's never been $177. And honestly, it says May 16 and you're here, it's 2022. We're not in 2020. This is 2024. So I don't know what's going on here. I don't know what's wrong with I've never seen 177. So let's go to May 16, 2022. May 16, 2022. Where the hell is May? May 16. Right around here. It was it was $17.71. $17.71. Okay. Just move the freaking decimal point to the right one time. You'll get where'd it go? You'll get $177.10, which is around $177 here. Okay. So that's all it is. It's just a decimal place math. But the problem is these people, I hate when they do that. I hate when companies do this because, yes, it's good because it means that the stock price is going to go higher because retail investors just don't know how to do math. And they're going to be like, oh my God, wasn't NVIDIA $1,000 long time ago? Oh my, it's $135 now? Oh, hell yeah. Options chain will be better. All of that crap, right? It's just stupid. It's stupid. Okay. It's stupid. It's all the same thing. Right. So we're like NVIDIA, SMCI. We were calling this out. And then this thing went ahead and 10x'd. Right. So this is the power. But here's the thing though. I showed you the power of the intrinsic value of Enphase, which is in the prior video. If you haven't seen it, I recommend you go to our lives and previous videos and you'll see like, oh my God. And here's another thing. It was $177. Ow, the stock price is high. No, dummy. Look at the market cap. The market cap was $443 billion. The market cap was $443 billion. Okay. Look at the market cap now, 3.3 trillion. Well, Albert, you know what? 443 billion is more than 3 trillion. Are you kidding me? Right? How many trillions How many billions are in a trillion? 1,000. Okay. So we could say 3340. We could take 3340 divided by 443.36. That's 7.5. So essentially, the market cap 7.5x from $177. And we were continuously calling it out as the market was deteriorating with Meta and all the other stocks in 2022. Because remember, 2022 was a bad year. Remember that, guys? Come on, you can't forget. It was a bear market, right? Meta was falling. Jim Cramer was coming out saying, oh, I don't trust Jim Zuckerberg. And Jim was being Jim, stupid Jim, right? But you can see here, the math is the same. The math is the same, guys. It's just a math thing. Okay. So you saw it with Enphase. We did it with Enphase, and we were able to show that, hey, this thing grew. We went ahead and we did it with NVIDIA. We did it with ExxonMobil. We did it with so many companies. Okay. And unfortunately, there's going to be people out there that are going to say, I don't believe it. I don't believe in your calculations. I don't believe in, and that's fine, right? You know, you can't, again, in life, it's a standard deviation bell curve. There are people that are very smart and there are people that are very dumb. Okay. I'm just at this organization that I created. I'm just trying to reach people in the middle, right? Now, if you know that you're dumb and you think you're on the left side, you're actually in the middle, right? Because if you know that you're dumb, it's actually a sign of growth. Because I know that I'm dumb, right? I'm dumb, right? And by knowing that, it helps me learn and get better, right? But some people, unfortunately, it's called the Dunn-Krugenberg effect. They believe they're very smart and they believe it's easy in something, and then they get attacked and they get real and then they run away. But anywho, and by the way, this is the Wall Street screen that our software creates. It's currently down right now. It's in the process of updating and revising. There's some code thing that needs to be fixed. But you could see the power of this, guys. I mean, just look at this, right? So, and then here's a stock terminal that shows us the detailed stock terminal commands that we have. And just look at all this. We have 2.5 billion outputs and commands, right? So it's very impressive. It's really good stuff. And, you just click on the preview here and it kind of shows you, how it looks like. You can go ahead and, I don't know. Let's see. Let's see something that most people like. I don't know. What do people like? You can look at the treasury rates. That's good. What's something that people really like? Options flow. You got some data with options flow. You got graphs and stuff. Whale watchers. You look at whales. You want to see if whales are entering the stock. It's all good. It's all good. Oh, implied volatility. That's important because that helps with options. So you can get a lot of money on your options. Dark pool prints, the largest, dark pool trades. I mean, it's just, you guys can kind of flip it around here. We got crypto. We got our own daily analysis of graphs where you can essentially have it all automatically populated with the Fibonacci sequence retracement and the 20 and 200-day simple moving average. I mean, it literally, there's just too much. It's too much. It's insane to go over. It's too much. Okay. So then you guys take advantage of this. And I hope that, people really see this. And, sadly, I don't have the time to update this video. I'm going to leave it as is. And honestly, this will be a good filter for people to really say, interesting. He made this video in 2022, but it said 174. Why is it 174 when it was actually $17? Why? And it's actually it's a really good filter because it really is going to filter the astute versus the clueless. And I think the people that I want joining our platform are people that are hungry, people that love to read, and people that are going to add value. Because, as soon as you join our platform, and some of you've joined, but haven't joined the private chat group, that's honestly sad because you're leaving yourself out from their software, and maybe you just bought it and you'll get to it later. But my recommendation is, if you're going to buy something, you take advantage of it. I mean, what are you waiting for, right? So join the Discord for people that have already purchased the mastering. I mean, I have people that purchased it like some people that purchased it a couple days ago and they haven't even logged in to the stock terminal. And there's some people that purchased it 8 months ago and they haven't even logged into the stock terminal. Like, what are you doing? Well, you just forgot about it. So take advantage of it, right? Because we want people to we want to grow the community, and I think that's really the hidden value of this, right? The hidden value is bringing like-minded people that want to do something different, that want to learn about essentially how Wall Street calculates these price targets. And have you ever had that thought? How do these analysts calculate price targets? Because if you go ahead and we could just, it's very interesting. We could go ahead and do this real quick. And we could just kind of open up the terminal here real quick. Just kind of open the terminal here. You also have access to AI too, which is pretty cool, right? And it's all included, right? So we could go ahead and we can open up a help menu here real quick. And we'll just open up the due diligence section, right? And then let's look up a graph that looks at analyst price targets, but let's look it up for Clover, right? So if you look it up for Clover, what you'll do, what you'll see here, and you could kind of blow up the picture, you could see that back in 2022, the analyst price targets were around $3 and $3.50. And if you were to go back to 2021 and 2020, well, you would have seen the analyst price targets in the $9 to $15 region. And as the stock price continued to fall down, you can see analysts were tracking their price targets lower and lower and lower. The same thing is going to happen with when the stock price starts to increase, which we know it will. Not a guarantee, not financial advice. I'm not a financial advisor. You know the drill. But once the fundamentals start to improve, you're going to start seeing these analysts start increasing the price target. But the question is, I have to ask you, and I'm asking you, the people that are watching my channel, our channel, do you think these analysts know the true value of the company? And do you think sometimes they just say a lower value to be relevant, but in the background know that it's actually higher and is worth buying? Well, yeah, of course. Look at JP Morgan Chase. They went ahead and said Clover's a sell. Well, why is JP Morgan Chase buying Clover now? They bought Clover more than they ever have. They bought Clover more than they bought Clover when it first SPAC'd. But yet they're not even covering the stock because they said it was a sell. So analysts accumulate and then they start talking to you. And by the time they talk to CNBC, it's already late. They're going to be selling you the shares. So another one I want to say, and I haven't done this, so I don't know how it's going to look like, but it might basically follow our hypothesis. But Jumia is a company that recently increased in price. And see, analysts were dropping their price targets. And I'm curious to see now, because the stock price went from around $2 and it increased up to around 10. Now it's hovering around 9 to 8. And interestingly, we are going to start seeing more. But remember, the red dots are analysts' coverage. Okay. We're going to start seeing analysts start to say, oh, it's a $7 stock. Oh, it's a $9 stock. You're going to start seeing them coverage. And it's just a game, guy. It's a game of Wall Street. Okay. And again, you have access to this data. This data is expensive as hell. I mean, you know what I mean? You can open up the help menu here. And we'll do a couple things. We'll do price targets. And we can do, let's say, price target consensus. I want to know the price target consensus of NVIDIA. Okay. And I'm curious to see if it's going to be pre-stock split or after stock split. Yeah. So we have target low is 130. Target, so it's still averaging. So NVIDIA is probably not a good example because analysts haven't really updated it yet. It just recently did a stock split. So let's do a price target consensus of a stock that's, Apple, right? So we can see. So target high of Apple is 275. I think Daniel Ives, which our stock terminal can tell you which analyst did it. It's just an extra command. Target low is 110 and the consensus is 194. Okay. And if you were to look at, let's say, Price target summary, and we can look at Apple here. And again, this is here. This kind of gives you so we got it from Tip Ranks, which again, Tip Ranks cost people $20-$40 a month, but we democratize this because it's analysts, right? Information. I'm trying to figure out, did I do the wrong command? Yeah, no, it's not the right command. Let's look at Apple and let's do, I don't know, 10. It's the amount of how long you want to go back for. So we can go up to the original one, and you can see, June 11th, Brad Erickson. You can look up Brad to see if he's reliable. Adjusted his price target. He said his price target of Apple was 230. Okay. He posted it at $193. And then Apple went to 230. So, you could have done a covered call and you're like, oh shit, this is going to be good. And if you were to look at Apple real quick, it's 214 and he posted it at 193. You see, hold on before 193. And you could see how you as a, stock terminal member, you would have had access to this and you would have gained 10% on Apple, which is impressive. Imagine all the other stocks, right? So, and there's more people here and more price targets. I think this was out. There it is. There's Daniel Ives. So we have that data. Daniel Ives at $190 said the stock was 275, right? Well, he's from Wedbush. I like Daniel Ives. Daniel Ives knows a lot about Apple, okay? So you can see the power of the stock terminal, right? And again, I don't really talk about it a lot because I'm busy with my medicine world. I'm busy trying to become a neurosurgeon. I'm busy applying to residency and do it. So, but the thing is, we've created a product that works, and we believe that it gives you, it does the job. It gives you financial information, right? The question is, what are you going to do with this? Some people are going to be trailblazers and they're going to win. And some people are going to take a suboptimal approach, right? So for the people that have purchased and have not joined the terminal, join the terminal. What are you doing? Start it. Start the process, right? Don't just buy something and not use it, right? So we have some people that have done that. I was like, come on, guys, right? And I get it. I think what they did, I think what the intention is they bought it because there was a sale. I'm like, they're gonna get to it later. But me as the instructor, I want to push you guys forward. That's the whole point. So I want you to move it a little bit and get on to learn this information, because I think the bull market's about, we're already starting to see $1 trillion AI investments now. I mean, Kathy Woods was right. You know what I mean? So I think that's all I have for you guys. I hope that was helpful. I got a comment here. It's funny how people have to say not a financial as if they're if they are a wealth of knowledge. I've never met a wealthy financial advisor. No, I know exactly. I oh my God, dude, that is hilarious. No, you're right. You're right. It's funny because if they were truly good, if they were in a position where they are, let's say, of their role and title, do you think they would be there helping you? I mean, maybe some like it, right? Some like it, but you really, you know what I mean? So good on you, Scruff McGruff. I agree with you. Yeah. My mother calls this a scam when I try to explain to her, and that's fine, and sometimes, like, for example, Warren Buffett might call NVIDIA a scam, right? And sometimes you have to be in your circle of competence. If some people don't understand this, which is fine. You can make money in real estate if you understand that, right? You know what I mean? But the thing is, a lot of, trust me, how many times I've heard people say Wall Street's a scam? Smart physicians, man. And it like kills me. I'm like, man, all this knowledge and all this knowledge. And it's like, damn, man, it's like, it hurts. It's not transferable, I guess. So, exactly. They'd be on the beach. Absolutely. They wouldn't be there. I can't, they want to collect their percentage, their fees. It's all about their fees. I can't wait till Clove hits so I can dance around her. No, be nice there. Be nice there. Give her some flowers. Dance around her. Put flowers around her and dance around her. All right. All right, ladies and gentlemen. Hopefully this video was helpful. I'm not going to update this video here because, again, this is a great filter and it shows, it really is going to show between the astute versus not. Because, you kind of have to have some form of a, cephalization of the frontal lobe to understand kind of what I'm saying and to see it. And the people that I want on our platform, I want them to have some form of intelligence. I don't want the wrong group. And I think Dish would agree to that because I think it'll decrease the value of the human capital of the book. Because you guys have to understand, it's not about money, yeah, no, let's look at the definition. So, you know what human capital is, right? Human capital is the skills, knowledge, and experience possessed by an individual or population viewed in terms of their value or cost of an organization or country. So, like, what I'm trying to basically tell you is if we bring on people that are, and again, I'm not trying to delineate, if you're an idiot, don't join the platform. No. You can still go from zero to hero, right? We solved the biggest issue, which is what the hell is a stock, right? And we take you from zero to hero. We have that. But again, it's the mentality versus somebody that says, I got $20,000 or $100,000. I want to bet it on red. We don't want those people, right? We don't want people that come in and say, oh, I want to make a percent a day. No, we don't want you, right? Get out of here, right? I don't want those types of people, right? I want people that are practical. I want people that are not childish, right? Because again, I have to interact with these people my whole freaking life. You know what I mean? Lifetime means lifetime, right? So it's gonna be hell. And Dish, I know you know who I'm referencing. You know what I mean? Holy crap, right? And no, it's not you, Lizard Man. I love you, Lizard Man. It's not the Lizard Man, but you know who I'm talking about, right? So yeah, so there it is. Let me go ahead and thank you for joining. I just came. Do you think that retail could have predicted NVIDIA's 1,000 in the last 2%? So if you watch the video, it'll answer your question. So go back in the beginning and watch the video. State of the art was I don't know what that is. I'll look it up later. Oh, I just read the complete title. Never mind. I'll rewatch. Yeah. Rewatch and you'll see. All right, guys. That's all I have for you. I'm going to go back and do more surgery questions and study anatomy and do a lot of paperwork and boring stuff, but necessary to advance the mission, which is to save lives, which is my primary goal. This is just all secondary. This is just a hobby. Okay. All right, ladies and gentlemen, I will see you on the next one. God bless you.